Hello and welcome back to On the Couch with Nici, where I bring you experts for everyone. So, who's with me on the couch today? I have Jarrad Brown from Global Financial Consultants here to take us through a Wealth Management 101. This is an industry that brings with it confusion, intrigue, suspicion, and even fear. But is it that ominous? Let's have a chat and find out what it all actually means. Okay, Jarrad, break it down for me. Wealth management, let's assume people know nothing. What does wealth management cover?
Okay, great question. So wealth management, if we break it down into 6 key areas, we have saving, very simple. What are your goals? What do we need to save to get there?
Yep.
Retirement planning. Then we have insurance. So life cover, disability. What happens if you can't work? How do you protect your income?
Yep.
And how do you make sure that that's global as well, particularly for expats who are moving around the world a lot? Then we have estate planning. So how do you actually protect the children? How do you protect the family? We then have property. Property is always going to form a large portion of our clients' assets. And then it just comes down to broad strategy. So why are you in Singapore? What are you really trying to achieve?
And in those 6 areas, people can cherry pick what they want?
Yes, they can cherry pick what they'd like to do.
Because some people might have an insurance policy with an insurance company, so they don't need that part, but they need something else.
Exactly.
Wealth management in its term implies that somebody needs to have wealth in order to participate. And I think a lot of people think that wealth management, I'm not wealthy, I can't do it. How much money does somebody actually need to be able to play the game?
Some of our clients will have $1,000 invested, some of our clients will have 10 million. So
Right.
it's far better to have the strategy outlined when you have nothing and start building from scratch than waiting until it's too late or waiting until you think you have enough to see an advisor. You have to start somewhere and far better to start early than put it off until you think you've got enough.
Many people view wealth management consultants as sharks trying to get their money. You don't have the best reputation. What has your experience been with that?
Yep. Look, it's an excellent point, and to be fair, 25, 30 years ago, I think that reputation was spot on and deserved. However, if we look at what's happening, particularly in Australia, the US, Canada, and it's coming into Asia as well with regard to regulation, the disclosure of fees, conflicted remuneration being removed, commissions being fully disclosed and transparent now, even just the education of our industry and the requirements of continuous knowledge improvement. All of those things are leading to a much greater reputation and skill set of advisors.
Yes, because there's more transparency, so
Exactly.
people can see what's going on in the background.
Yeah, that's exactly right. And over time, the reputation will improve.
So it's a tricky one to navigate. If you don't know anything about this industry and you want to dip a toe in and you think, which company do I go to? A lot of people go on word of mouth recommendations. Where do you suggest somebody start?
There are really, I guess, 3 key questions to ask any advisor that you're interviewing or trying to figure out who to go with. One is, I guess, what is their background and expertise?
Yeah.
So if somebody sold paint last week and now they're a financial expert, perhaps you want to go on to the next person. And the second one is, are they putting their own money where their mouth is? So if they're recommending a product that they're not buying themselves, that should potentially be a red flag. The third one is, what happens if that advisor leaves or we change our mind? Can we change?
Can people jump ship from the whole firm?
They can, but they need to ask the questions up front. So are there any penalties involved? What happens if I move? What happens if the advisor changes firm?
With the products that you recommend, do these product people offer you incentives to then on-sell their products? So how kosher is it? What's going on?
So there's 2 key terms, I guess, 2 key issues here. One is commission and one is conflicted remuneration. And what people need to realise is the 2 are vastly different. And so in some cases, commission will make sense as long as it's fully disclosed and everyone understands how the advisor's getting paid and what the client will pay for that.
Which I think people would expect.
Yeah, absolutely.
That you do get a commission, but then how many products do you have a choice of to put forward to people?
So that's when it comes down to the actual firm, the licence holder. So can that advisor then source from an entire range of different products? And is there a conflict or a bias to recommend one over the other?
If you were to say to somebody, if you do nothing else, you really need to do what?
One is actually just saving some money. Whether you work with an advisor or not, actually putting something away and doing it as early as possible.
With the view to invest or just put it away?
Even just putting it anywhere.
What is it that usually bites people at the other end that in your experience, that you've noticed?
Yeah. So one is just ignoring insurance.
So get your insurance.
Get your insurance. Number one, make sure that's sorted so that you've got that peace of mind. Number two is really just figuring out what the end goals are. So whether that be sending little Billy to Harvard at the right time, or providing your daughter with a Kickstarter fund to go and buy her first home in Sydney. Whatever it might be, start mapping out those goalposts as early as possible.
But people might need guidance on what their goals actually are.
A big part of our job is challenging people on those priorities, because everything is a trade-off.
Yeah.
If you want to spend all of your money travelling now, to your point, that's going to bite you in the backside later on. You're not going to have enough to retire, or to buy that retirement home, or to buy that nice car when you return. Maybe you need to go and speak to a coach, speak to a consultant, speak to an advisor, and start assessing those things.
Because people might be conflicted with their partner. There might be different approaches. One partner might say, education is the most important, and the other spouse says, no, it has to be our retirement. And you can give guidance on that.
Absolutely. Okay. So you start to challenge people on their own goals and their priorities. They may be spot on. They may be totally off the mark.
Yeah.
But it's just getting them to actually truly assess what's important, and then understanding what the trade-offs are. And are those goals actually still important?
Yeah.
Have they changed?
So when it comes to investments, is it a marathon or is it a 100-metre sprint? Is it something that you don't see any return on investment for quite some time, or can it be sooner than expected? How long is it till somebody sees some fruit from the seed?
So the returns will always be dictated by the market. Obviously, if the market goes up tomorrow, there could be a great return tomorrow.
Yeah.
If the market goes down tomorrow, then there'll be a negative return. But it's just really understanding how the markets move over time.
And is there a good and bad time to start?
Look, the best time to start is yesterday. The next best time is now. We're very bad at timing the market.
Yeah.
So the best time to start is right now.
Okay.
And buy as much as you can, as often as you can, and just continue to build your wealth.
Somebody could start off slowly. I mean, people might be a little bit hesitant at the start and just say, here, take $1,000 and let's see what can happen with that. And then they build confidence, and then they can grow from there.
Absolutely. And there's nothing wrong with that. It's starting, it's getting comfortable, it's dipping your toe in the water for some people.
Yeah.
For others, they've got a lot of experience investing money, they know how markets work, and they're happy to sort of jump in with both feet.
Okay, and if somebody starts off with global financial consultants, and then after a few years they repatriate, does anything need to change, or can it all just keep going?
So it'll depend on where they go, what options there are locally. Do we have referral partners in that jurisdiction?
Yes.
Which in many cases we will. So we'll work hand in hand with that firm that'll be licensed in that jurisdiction, and we can continue effectively to work with that client.
So somebody thinks, okay, I've heard enough, I really need to get this stuff sorted. What's the first step for them?
So the first step is really booking an appointment.
And is that charged?
No.
No. So that's a free session. You can come and just have a discussion. Is the person then free to walk away and maybe consult another firm?
100%. So there is no lock-in obligation. It's an obligation-free discussion.
Obligation-free discussion.
To use the old terminology. No steak knives, no, not until they sign up. From that initial discussion, we'll then start gathering data, looking at their situation, looking at where the pain points are, what the goals are, start challenging them on those priorities, those goals at that point, and then start to put together a few different options, a few strategies for them.
There you have it. Your family's financial security should be approached in the same way that we view our family's health and well-being. Find out what's the best way to ensure your family's security. These may be discussions that you haven't had as yet. We aren't experts. We can't be expected to know how to navigate this, but someone like Jarrad from Global Financial Consultants can. Do your due diligence. Just call them, make an appointment, and find out for yourself what are your family's goals and where do you want to end up. Thanks everyone, I'll see you next time.